Hey everyone, welcome back to the channel, your number one source for income-oriented investing. I am here with Matthew Tuttle from Tuttle Capital Group, which basically has the Income Blast ETF. So that will always get my attention. How are you, Matthew? Welcome to the channel.
I am great. Thank you for having me.
I appreciate your time. So I reached out to you. You reached out back right away, said, yeah, sure, I'm interested because today we're going to talk a little bit about the BITK ETF. I believe this is the only ETF right now under your Income Blast ETFs banner or
We,
whatnot.
we, we have a bunch more coming, but right now that is the first.
Okay, cool. So first of all, can you give me a little bit about your background, your history in the industry? Very curious about that since this is the first time on the channel.
Yeah, so I'm an ETF issuer, but I'm different in that I'm also a very active trader. I've been trading in markets since 1981. And now as an ETF issuer, we really focus on ETFs geared towards kind of individual retail traders. And I spend a lot of time on different discords and on social media. So I'm really attracted to what's going on now with all these self-directed retail traders.
Interesting. Okay, and is your ETF firm going to be focusing on income-oriented products, or are you going to have different types of product for different
Well,
investors?
so we're known right now for 2x levered and inverse single stock. And we're always going to do that. I mean, our biggest ETF right now is 2x long micro strategy. So that's a specialty of ours. Now we're seeing if we can get involved in 3x. We'll see whether those get approved or not, but so we'll be big there. But I'm an options guy.
Mhm.
Personally in my own portfolio, I'm trading options. So, I took a look at what's going on now in the option income space, and I looked at all the products, and I'm like, yeah, I these really aren't that great. And so I'm
Really?
thinking,
Explain.
well, so, as an option guy, one of the things I never do or almost never do is write covered calls. Because
Really?
if I own a stock and I think it's going up,
Yeah.
why do I want to cap my upside? Now I basically, have a trade that, maybe was asymmetric before, where now I've got limited upside and unlimited downside. That's a crappy trade. I mean, if I were buying like Procter and Gamble, would I maybe write a call on it? Sure, because that's not going to zoom up, but I don't buy Procter and Gamble. If I'm buying like a micro strategy, I'm hoping that goes up 50% in a month. Last thing I want to do is limit my upside for, maybe a small payout. So that was the main thing I saw. What I will do is I'll do stuff zero DTE because studies have shown most of your returns come overnight. And I rather would go into the next day, without my upside cap. And then the other thing I do all the time is I write puts. So the
Hmm.
income blast suite is going to focus on those two areas, zero DTE and more put selling strategies.
Okay, cool. It's cool to get your perspective. Yeah, so my channel actually, I'm not sure if you know, it focuses mostly on covered call ETFs, the covered call
Which makes sense.
strategy.
I mean, that's what's out there.
Yeah, yeah, and I of course there is a trade-off, but in Canada specifically, I think it's coming for the US as well. There's lightly leveraged cover call ETFs, and when you're not
We're
doing
going to
cover,
have some of those as well.
yeah, exactly. So let's just get into it right away. I think this is your only product right now, and like you said, you have more coming. I was very curious to see this one because the yield is enormous. So this is BITK. This is a ETF listed on the US stock exchange, on the US stock market. The Tuttle Capital IBIT zero DTE covered call ETF. So tell me a little bit about this ETF because as soon as I saw zero DTE on IBIT, which I'm assuming IBIT is going to be your primary holding, I was a bit confused because I thought only zero DTE you could only do it on indexes for now. Maybe that's changed. Please enlighten us on this ETF.
So that has not changed, but there are two types of options, which most people don't realize. There are the listed options that you and I can go into our brokerage accounts and buy. And you are correct. Unless it's like SPY or Qs or, the S&P 500,
Yeah.
you're really only limited to Fridays. The only listed options you have. But there is another market for options called flex options.
Hmm.
Options are basically customized options where I can do whatever I want, whatever strike price I want, whatever expiration date I want. I can do European instead of American. I can make them cash settled instead of, settled by delivering securities. So and it's a market that I don't believe retail investors have access to. Maybe there's a broker out there who could do it. I don't know. But you basically transact these with floor brokers, unlike the SIBO or the NASDAQ. So we have the ability in this fund to trade flex options every day except for Friday, where Friday we have the listed options. So
Hmm.
if you look at our holdings,
Yeah.
for example, as I see you are, so we've got what's called a synthetic long in IBIT, which is the BlackRock, Bitcoin ETF. Those are both flex options for the synthetic long. And one of the ways you can tell is our strike price is $64, or no, it's probably $70 now,
Yeah.
$70.01.
Hmm.
That's usually a dead giveaway that that's a flex option.
Okay, so this is you have a call and you have a put to synthetically give you access to the price movement of IBIT. Very similar to kind of like what the yield max guys do, right? Instead of
Exactly.
holding.
Yeah. And
Okay.
then every day we're going in and we're writing a call on top of that, which will be a flex option. And at some point before the end of the day, we're going to close that out.
Okay, so you're
Come
doing
in the next day unencumbered.
okay, so that's what you meant where we're getting the overnight exposure. You're writing a call every day on IBIT, I'm assuming, on the
Correct.
IBIT. Closes out
Correct.
by end of the day. Overnight, you're capturing everything.
Exactly.
Okay, tell me a little bit about these crazy distributions. The first one's $1.50, which I saw it was at 300% yield. The latest one at 50 cents, which is, I believe, calculated annually times 52, if you will, 108% yield. So how are you able to generate these really, really high yields, and do you expect this to continue?
So I don't know whether we're going to continue at that rate. What we did right off the beginning, because, I also, being a trader, I kind of look at this from a trader mindset.
Hmm.
And, right out of the gate, we were up big. And, we were up big because Bitcoin was up big. And, my sense was, let's distribute a bigger dividend this time. Was a little bit worried about the crypto market myself and just figured, the first dividend, we ought to make a little bit bigger return, return some capital gains along with the income. The next one was a little bit more regular and, we'll see. So it's not going to be 300% yield. We're thinking we probably settle somewhere when all is said and done around the 30 to 60% range.
Okay.
But we'll see how it all works out. Yeah, but from if Bitcoin keeps going up, which it's paused a bit here, we should do much better from a total return standpoint, which I think matters if you've got an intellectually honest product, than the other, IBIT covered call strategies that are using maybe weeklies or quarterlies, where again they're going to cap upside. And a lot of times, especially with Bitcoin, the upside comes like over the weekend or overnight when it's trading a lot thinner.
Yeah, so that was going to be my next question. What do you think your strategy has as an advantage over what I like to say more of a classic cover call strategy? Neos is in the game. You have Roundhill. You have Amplify ETFs. You have even a couple of others I'm not thinking about, but
Yeah,
this
there's
seems
like
to
four
be
or five.
yeah.
Yeah, I mean, and it's really what I said, where you are unencumbered over the weekends and overnight, where you can get very large moves in these markets where, if, IBIT's at 64, if I'm sitting there with a 65 call on top of my IBIT and all of a sudden, Trump tweets something over the weekend and it opens up at 70, you're pretty pissed off with the traditional product, where we get the entire upside, and then maybe I write a 72 on top of it or something like that.
Interesting. Okay, and the distribution, what is that made out of? Is that does that include all the premiums that you're taking in daily, paid out weekly, and some capital gains if Bitcoin goes up? Tell me a little bit how, because this whole NAV erosion thing in the US is very prevalent, especially in the really, really high yield funds. What would you say about what the
Yeah, I mean, we,
distribution is
we
made out
want
of?
to we want to balance that as much as possible. If we've got some nice gains, then yeah, we'll distribute some of those as well. But what we don't want to do is, I think what you see in a lot of these ETFs is, hey, let's just create a shiny object and hope people don't look, beneath the hood. And I get people telling me all the time, Matt, all that matters is the yield. Total return doesn't matter. Like, but I don't care. Total return matters to me,
It's the
and
opposite.
right, I'm a shareholder. I'm not going to launch a product that I'm not going to buy myself. And to me, total return is everything. If I generate a 30% yield but lose you 50% of your principal, net you're down 20%. To me, that sucks. Will some people buy it just purely based on the yield? Sure. I'll never forget. I gave a talk once to a retired men's group on investing. Guy comes up to me, he's like, "Great talk. I don't need your help. I'm earning 15% on these levered closed-end funds. I mean, my principal is down 50%, but I'm earning a 15% yield." I'm like, wait, what? Like, dude, you're losing money. How is that good? Some people, don't realize that, but we're not going to play that game.
Interesting. Interesting. So tell me, if you can, I know there's a lot of compliance regulations in the States, even in Canada as well. Tell me about the future products you think you're going to be launching. Are they also going to be zero DTE style? Are they going to be also under the income blast? Are you going to have other products that are going to be more growth oriented? I'm just curious about the future.
Yeah. So, and we filed for everything, so I can mention it.
Okay.
So we're going to have a few more zero DTE on single names: MicroStrategy, Tesla, NVIDIA. The names
Yeah.
Uh, but then what we're going to do is the next generation, which I hope to have out in December, but maybe January. We're going to do put spreads. So you get, like, say a yield max, they're going to write a call spread.
Yeah.
Problem I have with the call spread is it limits your upside. So we're going to write put spreads instead, which means you've got unlimited upside and probably about the same yield, if not more, than you get on some of those. Then we're going to take it a step further. We're going to have some of these thematic baskets.
Hmm.
So drones, nuclear stocks, all of that stuff. And we're going to do put spreads on all the underlying stocks there. And I have not modeled out those yields yet, but a lot of these stocks are very volatile, high implied volatility in their options. I mean, those are things where we could end up with really eye-popping yields without distributing any capital gains.
Right, right. Okay, super interesting. Are you going to be sticking to sector single stocks, or are you going to get into maybe like a bit more broad-based, like indexes, Nasdaq,
We're
S&P?
doing both, but not
Okay.
not Nasdaq and S&P. I mean, I think that's that's been done over and over and over again. Really, what I am more interested in, and I think other people should be, is the themes. I think this market has become thematic and is not going back. Where, yeah, I was on Bloomberg yesterday, and the guy's asking me about bank stocks. I was like, dude, I don't care about bank stocks. This is such a target rich environment. Why would I buy like JP Morgan or Goldman Sachs? There's no point. There's so much. I mean, drones, robotics, all the aspects of AI, space, on and on and on. So those are the areas I want to focus on.
Interesting. Interesting. Well, Matthew, you've been great. I don't have any further questions. Not sure if you have any closing remarks, but my channel is all about income-oriented investing on the Canadian market and the US market. So we'll definitely keep an eye on your upcoming launches. And thanks so much for coming on. Appreciate it.
Hey, thank you for having me.